In this episode of the MSA Rental Market Update, we are talking about the Portland rental market for conventional multifamily properties. And you can see here we have the Portland metro statistical area drawn out by CoStar and where it is in relation to Seattle. Here is the Canada-US border. Vancouver sits kind of right up here, not very far from that border. And we've got Spokane, Washington over here, and Boise, Idaho kind of sits down over here somewhere. And if we were to keep going further south, we'd run into Sacramento, California. So kind of an idea of where this market sits. Let's go take a look at the filters, see what we're excluding. And as usual, we are excluding all corporate, military, senior, and vacation. We are only including market and market affordable. Now, I do want to say that keeping in mind the Portland, city of Portland, not the whole MSA, but the city of Portland is under rent control. So it'll be interesting to see what the data shows us, so that even though we are looking at market and market affordable, the entire city of Portland is rent controlled. So if we go to location, we can see that we are market statistical or metro statistical area, Portland, Oregon. So let's go take a look at the analytics, see what the supply side snapshot tells us for all three asset classes combined. So here is the supply side snapshot. There are 6,267 properties in this market, totaling 227,047 units. There are still 10,199 units under construction, and in the last 12 months, 2,294 more units have rented than went vacant, and in the previous 12 months, 8,555 more units rented than went vacant. So we've had a slowdown in absorption. We can see that slowdown in the vacancy, albeit very small, from 5.2 to 5.7%. So very low vacancy in this market. And interestingly enough, with that low vacancy, we've gone from 1566 to only 1611 in rent year over year. We'll see what quarter over quarter shows us, but I think rent control might have something to do with this. As usual, we are not looking at the capital market. We are only looking at the space market. If we scroll down and look at our long-term occupancy average, we can see this market likes to be around 94.5, and it is currently sitting at 94.25. If we look at the overall spread of this market, it generally stays between 93.5 and 95.5, and the lowest in 22 years is 92.5, and the highest is 96.5. So not a very big spread in this market, even though rent control is fairly new in the Portland area. So that said, let's go take a look at the data and see what the rent analytics tell us. And before I go do that, just remind you that when we get to the end of the video, I will plot where the Portland metro statistical area is on the market cycle chart, probably plotting it right here on the long-term occupancy average. But we'll see what the data tells us and see if it confirms that or not. So let's go look at the data for all three asset classes combined. So here is the rent analytic data for the Portland metro statistical area. We do not look at asking rent. We don't care what the owner asks. We only care what they collect. So we are looking at effective rent. First quarter of 2022, we were at 1552, went up to 1612, stabilized at 1613 between the second and third quarter, and then went down in the fourth quarter. So that's interesting. And that absorption slowing in our numbers on the supply side snapshot may have had something to do with that. We are not going to look at first quarter 2023 data because we've seen a lot of erroneous information. So we are going to discount that for now and just stay in the 2022 calendar year. Let's go see what deliveries and absorption tell us. So we can see that 1571 delivered in the first quarter and 1377 absorbed. Good, strong absorption. We like to see it around 80%, and it looks like we got that. Then 715 delivered and 1581 absorbed, so more than double in the second quarter. Occupancy ticked up from 94.8 to 95.2, so good, strong showing there. Then we had 522 deliver and 333 absorb, so a little slowing there, and occupancy stayed about the same. Remember I said about 80% will keep us stabilized, so came pretty close to that. But then we had 748 deliver and another 9 went vacant. So interesting that that occurred in a rent stabilized market, but or in a rent controlled market. But keep in mind that is still only the city of Portland, not the entire metro statistical area. And of course, occupancy did tick down because of it. Once again, we're not looking at the third quarter yet. So it looks like we had that slowdown or that downtrend from the third quarter to the fourth quarter, and these numbers in absorption would tell us that. So it looks like our demand supply principles in the Portland metro statistical area are reacting appropriately, at least for all three asset classes combined. Let's go see what each individual asset class looks like, and we'll start with Class A. Here is the Class A rent analytic data. There are 361 properties totaling 47,728 units. Looking at effective rent in the first quarter of 2022, it was at $17.95, went up to $18.82, slightly up to $18.91, and then down to $18.56. So we had that break between the third and fourth quarter once again. If we go look at deliveries and absorption, we had 770 deliver in the first quarter, 958 absorb. So good, solid, strong absorption. We had more absorbed than delivered. 298 delivered in the second quarter and really strong absorption in the second quarter. So we went from 90.3% to 92% occupancy in the Class A space. Then 148 delivered and another 516 absorbed. We are getting really strong absorption in this market. And then another 75 delivered and 203 absorbed. So we had more absorption in every single quarter than we had deliveries, yet we had a break between the second and third quarter, or between third and fourth quarter in rents. Little strange. I mean, this is really strong absorption that we're seeing in the Class A market. And again, I think a lot of that has to do with rent control in that area, but still very surprising that we had that downturn in rents. And it could be that the city of Portland may have caused that. I don't know. I can't explain that. But when you have that much absorption where we clearly have more demand than we have supply, which is what this is showing us, it's rare to see that rent go down like that. So a little surprised to see that. Again, may have something to do with rent control. Let's go see what the Class B space is telling us. Here is our Class B rent analytic data. There are 1,218 properties in the market, totaling 86,062 units. Looking at effective rent, it was at $16.43 in the first quarter, went up to $17.13. Slightly down, but you can say pretty much stabilized in the third quarter at $17.10. And then it did have that break between the third and fourth quarter down to $16.79. Let's see if deliveries and absorption tell us the same story Class A's did. So we had 688 deliver, only 392 absorb, not very good. 405 deliver, 538 absorbed, really good. We had more absorption than deliveries. 374 deliver, only 10 absorb. 672 deliver, only 35 absorb. So as close as these rents are between the A's and B's, we're sitting here around 1,700. I think we were around 1,800 in the Class A's. Class A's having more amenities than the B's have, are nicer properties. It tells a story here that with as many people that are absorbing in A's and not absorbing here in B's, that the B's may be losing to the A's because they're so close in rents. That is kind of what I glean from this. Now, you can take your own opinion about it, but that's what I get from this data. Clear that we have some kind of demand here. We did have a bit of slowing in the Class B space, but we had that really strong showing in the Class A. And with the rents only being about $100 off of each other, that tells me that the B's are losing to the A's. So what does that tell you as an investor in this market? If you're investing in the Portland market, you're better off, it appears, to be delivering A units or investing in A units rather than B units, because it looks like the rents between the two are really close. And of course, those residents are going to take the A's every single time in that case. I know I would. All right, so interesting story between the A's and B's. This is the first time we've seen this in any market we've looked at. So that's why I like doing these, because we get to see what all these different markets are doing. And it's cool how we can look at the data and let the data tell that story. That's the really interesting part of it. Now, we're obviously making assumptions, but pretty good founded assumptions, I think I have to say. Anyway, just my assumptions. Let's go look at the Class C space and see if we can get more contradictory information from C's, or if the C's are doing like the rest of the country. So here is our Class C rent analytic data. There are 4,423 properties, totaling 91,356 units. Looking at effective rent, we can see that in the first quarter we were at $1,258. Went up to $1,287, stabilized at $1,288 in the third, stabilized at $1,287 in the fourth. So we could glean from this. Well, we'll see what absorption tells us, but it looks like rent control may kind of have control of this, but let's see what absorption's telling us and see if we can't glean any information from that. So here is the absorption for the Portland MSA area, and it definitely looks different than the rest of the asset classes, the A's and B's. I'm not going to assume that there are really 80 or 40 units under construction here in this market, primarily because we don't deliver Class C units. We deliver A's or B's. And in this case, these could be bad neighborhoods, so we're going to discount this information over here. But what we want to look at is this absorption. And it's interesting, but look at the vacancy. I mean, we're sitting at 96% occupancy right now, so that's only 4% vacancy. So we've come down from 96.5 to 96, even with this negative absorption. So that kind of explains why it's sitting at stabilized rent. Remember, we still have about 1.5% to go before we hit that long-term occupancy average. I think it was 94.5, if I remember right, was that long-term occupancy average. So, interesting that we have such very low vacancy, very high occupancy in the Class C space, and they are losing people to this, to the Class C's, and it could be that they are moving to the B's, and we can see that the rents are about a $400 difference between the two. So we're sitting about pretty close to 1,300s, and I think we're around 1,650, 1,700 for the B's. But interesting story. Could we be losing them to that? Possibly. Could they be roommating up? Possibly. Don't know enough about the Portland area to know. But we do have very low occupancy, or very high occupancy, low vacancy, even with the absorption being as negative as it is. So what does this tell us for this market? Well, if we pull our market cycle chart up, because we're sitting just slightly below that long-term occupancy average, I'm comfortable putting it right here on the long-term occupancy average. I think the A's definitely outperformed the B and C in this market, which is interesting. We don't normally see that throughout the markets that we've seen so far, and we're getting close to 50 now. I think we're very, very close to 50. So your B's were a little lower than the A's, and I think the A's were stealing from the B's primarily because the rents were so close to each other, within $100. C's are about 300 below the B's, and we've got that negative absorption in the C's, but they are completely stabilized in rent. Again, keeping in mind this is a rent-controlled market. So I think we can set it right here on recession, or right here on the long-term occupancy average between oversupply and recession. I don't really see it moving much. It's not showing us any signs of moving. Again, that Class A market has really strong absorption, where we had weak absorption in B and negative absorption in C. So that's where I would put the Portland metro statistical area. That will do it for this week, and that concludes the Portland metro statistical area. Tomorrow I will not be doing a video because I will be doing an off-market intensive training, and it is an all-day class. Next week, we are going to start the week with Albuquerque, New Mexico, and then we'll be doing Chicago on Tuesday, Lake Charles on Wednesday. Spartanburg, South Carolina on Thursday, and we will finish the week in my home state of Alabama in Birmingham. So I will see you guys next week.